All right, today we're going to dig into the stock chart for the AI company BigBear.ai, ticker BBAI. And this one's a real head scratcher. There is a serious tug of war playing out between some really good news and some pretty rough technical signals, and we are going to break down exactly what it all means.
And that really gets us to the big question here. BigBear.ai just scored a major contract with the US Army. That's the kind of news that should send a stock soaring, right? But its chart is telling a completely different story, a much more pessimistic one. So what is actually going on?
Well, to figure that out, we've got to zoom out and look at the big picture first. We need to get a handle on the fundamental events that are pulling this stock in completely opposite directions. Only then can we really start to decode the lines on the chart. So let's dive in. So, you know where this is all coming from? We're breaking down this really detailed technical analysis report. Now, it is absolutely packed with data, charts, and jargon. So our job here is to translate all of that and pull out the signals that you really need to know about. And wow, this slide just lays out the central conflict perfectly. On one side, you've got fantastic news, a new Army contract, revenue up 23%. That's huge. But on the other side of the coin, they missed their earnings targets, which sent the stock tumbling, and their forecast for the next quarter didn't exactly scream confidence. So you're left with this paradox, this deep uncertainty that's setting the stage for a major technical battle. Okay, so with that conflicting fundamental picture in mind, let's see how this is all showing up in the technicals. We're going to decode what the chart itself is telling us, and just a fair warning. Right now, the message it's sending is pretty darn bearish. First things first, a quick definition. When you hear analysts talk about a bearish trend, all it means is that the stock is in a steady decline. The easiest way to picture it is like gravity. There's just this constant, invisible force pulling the price lower and lower. And what's really striking here is how all the signals are basically singing the same tune. The report shows that all these different technical tools are pointing in the exact same direction. One indicator that measures the strength of the trend, it's high. Another one that shows the direction, it's pointing straight down. Even the stock's own recent average prices are now acting like a ceiling above it, just pushing it down. So the big takeaway isn't just that it's in a downtrend, it's that it's in a strong, confirmed downtrend. But here's where it gets interesting. It is not a one-sided story. Despite that powerful downtrend, there are other little signals bubbling up that suggest a fight is brewing. This is where we get to the real heart of it all, the technical tug of war. So check this out. On the left, you've got the bears argument. They're pointing to that strong downtrend we just talked about, plus signs of distribution. That's just fancy analyst speak for the possibility that big investors are selling off their shares. But on the right, you've got the bulls, and they still have some hope. They're looking at that big Army contract and another signal that suggests, hey, even though the price is falling, some people are quietly buying. And maybe the biggest point for them, the stock is considered oversold. Think of it like a rubber band that's been stretched way, way too far. It suggests the selling might just be running out of steam, and a snapback could be coming. Okay, so with this tug of war in full swing, what are the actual practical numbers you need to be watching? Let's get into the nitty-gritty and translate all this technical data into the specific price levels that could decide who wins this fight. First up, we've got the floor, or what traders call a support level. That number is $5.85. This is the price where, in the past, buyers have shown up and basically said, nope, not going any lower, and they start buying, which props the stock up. This is the bull's most important line in the sand. Then you have the ceiling, or the resistance level, at $6.44. This is the exact opposite. It's the price where sellers tend to come out of the woodwork to take their profits, and that selling pressure pushes the stock back down. For the price to really move up, it has to smash through this ceiling. And smack dab in the middle of that floor and ceiling, you've got the battleground, the pivot point at $6.23. Seriously, think of this as the 50-yard line in a football game. Whichever side, the buyers or the sellers, can control this price, well, they have the upper hand for the next move. So let's put this all together now. When you take that floor, that ceiling, and that battleground into account, the technical report actually lays out three very distinct scenarios for how this could all play out from here. So it really boils down to one of these three paths. In the bullish scenario, the excitement over that Army contract finally takes over, it fuels a new wave of buying, and the price breaks through that ceiling at $6.44. In the bearish case, the negative technicals just went out. They break that floor at $5.85, and the stock takes another leg down. Or We could get the neutral scenario, where everyone just kind of holds their breath, waiting for more news, and the stock just chops around sideways, stuck right there at that 623 battleground.
And all of this leaves us with one last, really fascinating question. For a stock in a hot sector like AI, what's going to win out in the end? Is it the cold, hard data of a bearish chart, or is it the powerful story of a huge new government contract? The answer to that is what will finally decide who wins this tug of war.